What's up guys, Raymond here with another video, and this is our second financial statement analysis video of the German materials sector. And we done our first one yesterday, which was, I don't remember exactly the name of the stock, let me call it Oribus. So today's stock we're going to be analyzing is called Brenntag. So without further ado, let's get into it. But if you're new to my financial statement analysis videos, what we do in these videos is we look at the three top financial statements that are most important to a company, which are the general income statement, general cash flow statement, and the general balance sheet. And we look at the most important aspects of each statement, and we determine to our own judgment how strong the company is financially, and whether or not the company has a strong future and is it worth investing in. Without further ado, let's get into it. We're going to start with the key ratios. So the market cap being, of course, one of the most important. What is the overall price of the company? The company in its entirety has been sold at 10.2 billion euros, which is good. We always look for stocks worthy of investing in to be at least 1 billion euros or whatever currency it's denominated in. That just shows that the company has reached a certain level of attractiveness to investors, and that's my personal opinion. Of course, everyone has their own, but the PE ratio is 15.76, which is okay. It's not too high. We always look for 10 and below. But of course, if it's 10 and below, that probably shows that it's not very attractive to investors at a particular time. So, of course, you need to consider other key ratios. The revenue figure for the last financial year, that being 2021, was 14.38 billion euros. Of course, it's larger than the market cap, so it's larger than the amount of sales that the company made it's about 50% or 43.8% higher than the total cost of the company, which is very, very strange. Some would say negative. We're going to check the yearly performance to see if the company's price dropped significantly and by how much. So the company's price dropped by 20%, as we saw in the last video. I don't think that justifies, because as I said, there's a 43% disparity. Revenue figures, sales figure was 43% higher, is 43% higher than the market cap. That doesn't, but the 20% drop doesn't justify that. There's still a 23% disparity, so we need to figure out where that came from. There's probably some other aspect of the company that the investors don't like or don't trust, so we'll probably find out later on. Dividend yield 2.2%, which is quite low, less than 50% of what the minimum target, which is 5. Of course, if the company is making decent profits, which we're about to see now, then and it's reinvesting the rest back into the company, with regards to the cash flow statement, cash from investing activities, then we can somewhat justify the low dividend yield. Of course, we would have to see a return on investment over the past 3 financial years, but we'll see that later on. PE ratio, we've gone through. Earnings per share is 4.19, so 4.19 euros. So the company's market price per share is 66. It's 66 euros. So having a earnings per share of 4.19 euros is just under 10%. I think it's around 66%, which is 6.6%. That's my bad. 6.6%, maybe a bit lower. As you can see in the balance sheet, that's the first of the financial statements we're going to be analyzing. The profit isn't very high. It's probably around 5%, maybe lower. I would say around 2.5%, just be safe. And that's probably one of the reasons why, and that's been consistent for the past three financial years. The revenue figure seems to be increasing, but the profit doesn't seem to be increasing. And I believe that maybe because of the limits of the sector that it's in. Materials. Let me just read the about section to see what exactly the company sells. Brenntag SE, former Brenntag AG, is a Germany-based company active in the field of full-line chemical distribution, so it's into chemicals. It provides business-to-business distribution solutions for industrial and specialty chemicals. The company purchases and stores large-scale quantities of industrial and specialty chemicals, and so it basically deals with chemicals. I'm not too sure the specifics of chemicals and how profitable chemicals are, but so as it says chemical manufacturing, but this particular company doesn't seem to be making a large profit, but we're gonna move on a bit. The beta, which is the risk level of the company, is 1.07, so about 7% higher than the average, which is decent in the current volatile economic climate that we're in. The balance sheet suggests the company has about, I would say, 60%, 65% debt to asset ratio, which means it has 65%. So as a ratio, the assets being, for example, 100 billion euros, the company would have 65 billion euros in liabilities, that being debt and other forms of liabilities. So overall, the net asset value would be to take away 65 billion euros from 100 billion euros, and that will be left with about 45 billion euros. Sorry, 35 billion euros. But we're going to see the exact net asset value in a second. So the cash flow statement, we're going to go in a bit more detail. The net income, which is the starting line from the income statement, is 461 million euros from the 2021 financial year. 2020 was 473 and 469, so around just below 500 million euros. Cash from operating activities, which is one of the three main aspects of the balance sheet. Sorry, the cash flow statement. The cash from operating activities, which is the cash generated from the day-to-day running of the business throughout the year, was 388 million euros. The cash flow from investment activities, which is almost always going to be negative, which because it denotes the investment activity of the company, where the cash is gone with regards to generating more income. So the company invested 608 million euros. So that's going to take the company's overall, that's going to take from the company's overall cash. What exactly has it spent the money on? Capital expenditures being 199 million euros, and other investing cash flow items, which was 409 million euros. And lastly, the cash flow from financing activities was 174 million euros. So that's how much the company generated, but it did manage to pay out 208 million euros in dividends, which is good for the shareholder, and the retirement of debt. So it got rid of it gained 401 million euros from the retirement of debt, which is good. And overall, the net change in cash for 2021 was 21 million euros. Prior financial year was 206 million euros, but we do need to notice that, or take account of that, the net change in cash for the last financial year, the most recent financial year, the latest financial year, is the actual figure, or the closest figure to the actual net change in cash. So if we look at the 2020 financial year, net change in cash was 206 million euros, but that is not how much the company has now. The closest figure would probably be around negative 21 million euros, which is, we can't exactly say it's bad, because the company still has assets. So it's not as though the company doesn't have a net value. It doesn't have a positive net worth. We can see that by looking at the balance sheet, by looking at total equity. Total equity is 3.52 billion euros, and the total shareholders' liabilities plus total shareholders' equity is about 9 billion euros. So if we look at the total equity, which is 3.5 billion euros, and then we look at how much the company has been sold for. The company has been sold for 10.2 billion euros. So that is about 300% of the total equity. I would say that is not necessarily a good buy, considering that the PE ratio is quite high. The PE ratio is about so the price of each share is about 15, almost 16 times what the company earns over a year in profit. And as we saw earlier, the company earned about 500 million euros, and so it will take you about 15 years, and considering we saw earlier that the company earns about the same amount for each year. We saw that over the past 3 financial years. It will take you about 16 years to earn your money back. So as we can see, let's just see how fast the company's grown over its time as a listed stock. So it's grown 98, just under 100% in how many years? Let's just check. In about 10 years, so as I said, 10% a year, So it's actually grown faster than I expected, because I would say to get to 100% it would have taken about 16 years. So that would have been about 7.5% a year, but clearly it's done quite well. Maybe because the stock has reduced in price by so much. But without further ado, I'm gonna close this video. I feel like I'm talking too much, but thank you guys for watching. I'll see you in the next one.